Let's get our panel in here. Joining me this afternoon for a big picture discussion from the Schwab squad. Joe Mazzola is Director of Trading Services, and Cooper Howard's the Director of Fixed Income Strategist. Bounce back day here, at least for stocks, Joe, but what matters? Like, do we need to get above the level we were at pre-CPI before we wave the green flag?
I think that's important, Oliver. I would also say that, you write your notes in the morning. I send them out to you, and then now I got to change all my notes, right? Because I was about to say that the S&P 500, their slide today, kind of puts the benchmark on track for its worst 2-week move since mid-October. But it had a nice little rally, kind of led by communication services, kind of intraday. Push the market back up, in past that level. We're right at that 20-day moving average right now, right above 5,200. So, I do agree with you. I think that we need to kind of take out that pre-CPI number because of the damage that number did. I mean, if I look at kind of what happened to the breadth post-CPI, just kind of looking at relative to last week, S&P 500 now, they only got about 57% of the stocks above the 50-day moving average. It's much worse once you get down to the NASDAQ and the Russell, about 36% and 39% collectively. But just on the weekly advanced declines, I thought these were interesting. S&P 500, 2.5 to 1 on declines. Same thing with the Russell, 2.5 to 1. And then the NASDAQ is a little bit over 1.5 to 1 on the decliner side. So, yes, we got a nice little bounce today. Tomorrow with earnings season really kind of kicking off in full effect with the financials, it's going to be really important to kind of see whether or not they can carry the water as we head into the weekend.
Okay. The bond market pretty calm today, Cooper, but distinct in that stocks reversed their move from yesterday to a great extent. Bonds basically just kind of sat where we left them, and they tried to reverse, and it didn't work this morning. What'd you make of that?
Yeah, you're right. We did see a little bit of just kind of a hover, kind of a hold pattern that we've seen so far. I think what's interesting is that if you look at today's PPI report, that probably bodes well for PCE going forward. And I think that that's the Fed's, or I know that that's the Fed's preferred measure. That's what they've told us before. So I think that that's probably good news. So I think that's one of the reasons why you really saw a little bit more of a muted reaction in the bond market today.
Okay. At this point, then, what could kind of revive the bull trade into bonds, Cooper? Have we opened up kind of Pandora's box here to the higher yields as the default again? What's your take on kind of the trend status at this point?
I don't think that we've opened up the Pandora's box for higher yields. There is potentially a risk that they continue to go higher if we see the economic data come in stronger than expected. But I think what it boils down to is what's the Fed's reaction function and where the Fed is going to go. Yes, we have had 2 inflation reports. They kind of showed a little bit different of a story. But I think at the end of the day, what we've heard from the Fed is that they are projecting interest rate cuts. They want to continue to see more good inflation data. We obviously didn't see that with yesterday's CPI report. We did see that with today's PPI report. So I think one of the reasons why we've seen all the volatility is the Fed is data dependent. So that causes us as market participants to just be more scrutinized or highly scrutinized every data release that's coming out. But in terms of what the Fed and what probably interest rates are going to do, our case is probably still a bull steepener. We do expect the Fed to cut rates. We don't know. We know the direction of travel. We just don't know how fast are we going to get there and how many interest rate cuts are we going to get. But we do expect that cuts are still on the table. For them to be in a holding pattern or even to be in a hiking pattern, I think that that's a pretty high bar. So longer term, my view would probably be that we would see lower interest rates going forward, Oliver.
Okay. And it seems maybe there's, an ability for stocks to kind of put that on as a side issue, Joe, as we've been talking this afternoon, the AI trade enough to power us maybe through as long as the Fed doesn't go full on hawk and hike. What are your earnings expectations? What bar has been set here? Is this just watching our big chip leaders, Joe? I mean, all these other sectors are fun, I think we all like to watch the banks, but does anything really matter outside AI?
Yes and no. I mean, so, the expectations for earnings should be about a 3.2% year-over-year increase, according to FactSet. And so if you kind of look at analyst expectations coming into this earnings season as opposed to last earnings season, where they were pretty depressed. in that the hurdle was fairly low for the last Q4 earnings. So coming into Q1 here, really, like I said, really kind of kicking off tomorrow. The bar is a little bit higher, and a couple of the sectors in particular that I'm looking at. You mentioned IT. Financials to me, I think are pretty important. Just because when we look at the expectations for financials, they're not as high, and if anything, they're probably a little bit more depressed coming into this earnings cycle. I think probably because of what we've seen in terms of interest rates and net interest income, and what I really want to hear from the banks is how's the consumer looking? Are we setting aside more capital for loan provisions? What does the health of the consumer look like? I think you need to be paying attention to that when you're hearing the analyst calls. But I do think though that, as you mentioned, Oliver, it's ultimately probably going to come down to IT, just because that's what got us here, and that's probably what's going to take us forward.
All right, sure seems like a reasonable expectation, because boy, have they pulled us forward in the last 24 hours. Thank you guys, Cooper, Howard, Joe Mazzola. Heroic work from the AI trade takes us into the bell. Great work from those guys too.